Hey, thanks everybody. Welcome. Good morning to Sportico's Invest in Sports event. I want to thank, special thanks to Meredith and Scott and Dick and all the partners at Sportico. I venture to say, my name is Rich Raffetto. I'm the president of City National Bank. I'm going to serve as your moderator for this morning's panel on the corporate world that is sports, the business of sports. And I want to thank Sportico. In your 3+ years of existence, I think you guys have done as much, if not just as much, for the business of sports as Taylor Swift has done for the NFL in the last 30 days. So that is my lead-in this morning. So thank you, Sportico, and for doing a great job. I've always been a big sports fan, and you can tell that when I'm in a big meeting at the bank negotiating a transaction, and I'm at the closing table, and all of a sudden my cell phone rings, and it is the ESPN ringtone, you know, na-na-na, na-na-na. So I've always been a big sports fan, but I'm really excited to be hosting this panel and asking Steve and Colin some really important questions about what they do every day, because they are, you know, I work for the bank that is the bank to the stars, but these guys are the rock stars of M&A as it relates to sports teams and leagues, and right in the middle of it. Delighted to have you guys here today, and on behalf of my colleagues from RBC and City National, we love the sports ecosystem, whether it's individual athletes or teams and leagues. So great to have you guys here today.
Great to be here. Thanks, Rich.
Great.
Thanks
well, exciting times in sports. Besides Taylor Swift bringing out 27 million people to watch Sunday Night Football, Colin, you mentioned to me yesterday that the Manchester United have 1.2 billion, that's a billion with a B, registered fans. The business of sports is not only alive and well, it is thriving. Live sports is driving media, driving valuations higher and higher. As Meredith said at the Open, we've had record dollar amounts paid for professional sports teams, both in American football and European football, just in the last number of months here, and more deals on the way. So I wanted to open it up really just with a question, perhaps first to you, Colin. What is driving this surge in transaction values that we're seeing, whether it's the Washington Commanders or Chelsea, but we have pending deals potentially for Man United, and then the recent deal for the Denver Broncos?
Sure. There's no one factor I think you can point to. I think it's a confluence of things. The brands or the teams that you mentioned are some of the most coveted in the world of sports. Of course, you always have the trophy dynamic of these assets, but I think what's happened, especially in the last decade or so, is the underlying financials ultimately is what's driving the valuations of these teams. So when you have very attractive long-term economics locked in at teams, it's very easy to underwrite these businesses. So ultimately, yes, market competition usually drives price, but the underlying financials are critical. And so as the industry has matured, as new media rights deals, long-term ones have been locked in, people get more comfortable paying higher prices.
Thanks, Colin. You know, Steve, you and I have a little more gray hair than Colin, and we probably are among the few in this room that remember when ESPN was showing Australian rules football about 20 of the 24 hours of the day. Tell us how the landscape of ownership of teams has really evolved. I mean, as you said, Colin, from kind of the vanity or the ego of a high net worth investor family to a much wider universe of owners today. So tell us about that dynamic of what you've seen in your experience at Allen & Company.
Well, first of all, let me say, speaking of gray hair, it's a little disconcerting. There's on the screen a photograph of the three of us. I think mine was taken about 35 years ago. I don't have any gray hair, and I'm looking at it wondering who that is. You know, Colin mentioned, you know, the escalating values of sports teams around the world, and, you know, one factor, of course, is that there are more buyers than sellers. That's sort of, you know, M&A 101, no matter what the industry. But in terms of media, which has been a major driver of values, there's obviously some clouds on the horizon. I remember when I used to go to the video store and rent a Blockbuster VCR tape and take it home for the weekend and take it back, so I didn't pay the $2 late fee, and that's how we watched movies at home. And then this thing called Netflix came along, and they would send you something in the mail. And now we are obviously with streaming services, and there's probably not a Blockbuster store left in the country. I don't want to be too dire, but that's kind of where pay cable is going and has been going for the last little bit of time, and it's probably happening faster than most of us thought. When I started, actually when we sold Classic Sports to ESPN in the late 90s, it was just beginning to become the rocket ship that it became, and now we're seeing fraying at the edges. So the media landscape is clearly a driver of sports values and will continue to be. Colin's right, this is programming that everybody wants to watch, the most valued programming around, but there are some clouds on the horizon that need to be dealt with.
Yeah, and speaking of clouds on the horizon, Colin, I don't know if you have a thought around regional sports networks and dynamics in that space, because this enterprise is as you mentioned, values are driven by media rights and what's worked and what hasn't worked in whether it's regional sports programming or media rights in general.
I don't think anyone has the silver bullet for figuring out the RSN situation. I do think there is a solution where there is a smaller RSN business, but more profitable and stable over time, which will require each constituent to take a little bit of pain in this, including the programmers, the distributors, and the teams. You're seeing some really interesting models and experiments, is what I call them, with some teams that are trying to go it alone. I think it's still early to say if that's going to work. I mean, you have to remember, this was arguably, and Steve knows this better than anyone, the best business model in media for 25 years, where you're essentially charging customers whatever the affiliate fee was, and they weren't watching sports. So you had a huge amount of customers paying you that you didn't have to really serve and think about. And of course, the dual revenue stream model is arguably the best in media in the last 50 years. It's going to be hard to replace that and figure out economics that really work for everybody.
And speaking of economics, when you peel back the industry and you move into other sports leagues that are more emerging, is it still the media rights and the eyeballs that are driving value? So I'm certainly excited about women's sports, and emerging leagues that we are hearing about now with new investors, including some folks in this room who are actively supporting new and emerging leagues, including the rapid rise of valuations in women's sports.
Well, I'm glad you brought up women's sports, because probably the most exciting project we worked on in the last couple of years was the financing we did for the WNBA. It's not exactly a new league. It's been around for a long time, which I think speaks to the notion of how hard it is to launch a new sports league in whatever sport it is. MLS has been around, 30 years, Colin? Something like that, and finally, took off over the last number of years in terms of values. But the WNBA story is a great one, because basketball obviously is hugely popular. It was, I think, always viewed perhaps as a little bit of a stepchild of the NBA. And once Adam Silver hired Kathy, or brought Kathy in as a commissioner, and let them set their own course, and they will be out negotiating, I think, their own media deal, not part of the NBA deal. That league has taken off this past year in terms of sponsorship and interest and attendance and everything else. Of course, if baseball could have the Dodgers and the Yankees play in the World Series every year, that would be great. And somehow the WNBA managed to do that this year with their two super teams. So I think that's a great story, but it's hard, and it's catching lightning in a bottle, and it's not easy to replicate.
I just might add two things. We invested in a business called the PLL, the Professional Lacrosse League, which we started from scratch with the Rabel brothers about 5 years ago now. The media deal that we recently signed with ESPN wasn't the biggest deal in the world of sports, but it's certainly a validation that the model is working. So I think for emerging leagues, rightly or wrongly, getting some type of media deal is critical. To take it a little bit of a more global perspective, the IPL, certainly not emerging anymore, but the business in India, the cricket business, they signed a new deal recently that made those teams incredibly profitable overnight. All right, so that in most instances, the media deal is what drives margin for the league and for the teams. because it's relatively high margin revenue. So you have to obviously put the games on, sell tickets, merch, hot dogs and beers, but at the end of the day, the media deals typically are what drive EBITDA.
So along those lines, from the investor's perspective, and you guys work very closely with a lot of investors in this space with media driving values, as the institutionalization of sports ownership continues to be a thing that gets bigger and bigger, what are the key attributes that you're seeing investors attracted to the sports ecosystem, if you will? Is it non-correlated returns? Is it, what are the attributes that are driving the institutionalization and these additional investors, whether it's, sovereign wealth funds, foreign investors, et cetera?
Well, I never refer to it as vanity or ego. I think of it as psychic income. There's still going to be a psychic component to owning a sports team. But having said that, as Colin mentioned, in the last decade, I think professional investors who aren't necessarily sports fans themselves, but manage money for wealthy families, have come to see sports team ownership or sports asset ownership as an uncorrelated asset class that has proven over many decades to thrive through ups and downs in the market better than many other assets. And for a wealthy family, especially if you have some of that psychic piece working for you, putting some money, not betting the farm or taking out a second mortgage, but putting some money in that asset class has made a huge amount of sense and will continue to.
So Colin, when does the NFL come along and allow private equity ownership?
I'm not going to make predictions on timelines. I think it's inevitable for all leagues. If valuations of teams are going to continue to increase, it's just a matter of liquidity in order to be able to fund a lot of these transactions. But you have to set rules and guardrails because it can get out of hand pretty quickly. And what you can't have is a situation where someone's purely trying to buy a team for the wrong reasons, flipping it, putting too much debt on the business, and the last thing you want is to have one of the teams in trouble. But I think there's so much liquidity out there, despite current macro, that wants to put it into sports, that it will eventually find a home.
Yeah, just don't look for current return, current income.
Depends on the league, but yeah, I think that's a fair statement.
How come we haven't seen college endowments? You think about your alma mater, investing in sports, non-correlated returns, no need for current income, infinite investment horizon. Why haven't we seen that?
I don't think any of the leagues would permit it, frankly, or any of the major leagues. Even getting private equity approved in baseball, basketball, and hockey took a year and a half of vetting, and the guardrails that are put around those firms who have been authorized to invest in sports teams in those three leagues are pretty stringent. And for traditional private equity or for an endowment fund that needs to be able to flip out and get liquidity at some point, not to mention some of the political issues that come with an endowment or other similar institutions, I just think that's not happening anytime soon.
They're probably already invested, just indirectly, through the funds that they're backing.
Right, that's fair. I always kind of thought of myself growing up as a bit of a deal junkie, and a lot of us in the room are kind of deal junkies at heart, so I wanted to ask each of you to share some highlights of a favorite deal that you've worked on in the recent time period that might be interesting to the crowd gathered today. So maybe start with you first, Steve.
Well, that's pretty easy for me. I mentioned the WNBA, and that certainly was high on the list, but the sale of the Broncos, for me, the best possible deal not only is one where we get paid, that's sort of comes with the territory, but a successful deal for me is one where the client is happy and the purchaser is happy if we're on the sell side. In the case of the Broncos, we were representing an estate. Joe Ellis was the trustee. Great to work with, so we had a really terrific client to work with. But more importantly, it was a robust auction. The runner-up recently bought the Washington Commanders, so it only furthered Josh Harris's appetite to own a team. But the Walton family and Greg Penner, who ended up the winners, even though they paid $800 or $900 million more than Sportico had valued the team, That's not a knock on Sportico. That's just the way these things go. It just happens. Scott, we try to give you guidance every year. I'm sorry. But they were really happy at the end, even though they paid, probably several million more than they thought they would have to, because they got the team, they won in that sense, and we delivered what we promised we would deliver in terms of what the team looked like, what the financials looked like, and that to me is the optimal transaction.
Colin?
It's like asking which kid is your favorite. I would say typically my favorite deal is the last one we've completed. I would say Chelsea more recently, just given the complexity of that. I personally gravitate towards challenges and difficult situations, and it's hard to envision a situation more difficult than that, where we wake up and the UK government wants to get on a Zoom with me to talk about how we're going to get a deal done in 60 days from start to finish. There was a lot at stake there. The club was essentially headed toward receivership if we didn't find a solution. We had multiple governments involved, an intense amount of press scrutiny. We couldn't find a law firm to help us with the deal, given some of the backdrop of what was going on in Ukraine, at least originally. And then 3 weeks later, of course, every law firm wanted to work with us when they announced that the proceeds were going to be donated to charity. So it had so many elements. I could probably write 2 books about those 65 days across multiple different time zones, and landing the plane on that one in a pretty good outcome was something that we're very proud of at Raine.
As you think about pitfalls and the deals that are challenging, what other significant roadblocks have either of you experienced in the course of deal flow that you'd share with this group, where you came away like, wow, I didn't think that would be the stumbling block in this transaction?
Well, other than the one that Colin and I are working on at the present time, and if you tell me that Chelsea was more difficult than PGA Tour PIF, that boggles my mind. I don't, like Colin, I think all of us who are in this business like the challenges, and you just deal with them when they come. I never expect a smooth transaction. Even the Denver one that I talked about before, it wasn't like it was just a smooth path all the way. But we've seen so many different twists and turns in all the deals that we collectively have dealt with that I don't think you stop and think about it. You just think about how do you solve it, and that's the way I go about it.
Yeah, I did ask both of these gentlemen backstage whether Greg Norman would still be involved after the transaction, and they either don't know or they wouldn't disclose. So,
Greg who?
So let's talk about the external environment. To what extent, we live in a very complicated world that just got a lot more complicated over the weekend. In a world where we have, significantly rising interest rates, inflation, changing values in commercial real estate, and we all know that commercial real estate investors have been one of the big buyers of sports franchises over a long period of time. Now not only war in the Ukraine, but in Israel, complicating the world going forward. What sort of things are keeping you guys up at night, besides just the intricacies of your deals, but from a macro environment perspective that could put this Goldilocks environment that we've all lived through to see rising team values continue to go upwards in the most recent periods?
I think just general uncertainty in the market. I mean, that's usually what drives S&P over time, is how people feel. And it's a very, very complicated geopolitical environment. I'm not an expert by any means. I'm actually less concerned about the cost of capital rising, because it just means that investors' rate of return typically go up a little bit in terms of what they look for, but deals still get done for the best assets. But yeah, I think just general uncertainty. People tend to preserve capital when you're in times like this. So I'd say that's probably the biggest question right now, is when the world gets a little bit more stable.
Yeah, I think the most important thing is to be realistic. when you're dealing with a client or when you're dealing with the sale of an asset in tough times. There's some clients who can weather the storm, and I think if you own a marquee sports asset and you hit a rough patch in terms of the economy and you have the wherewithal to weather it, you should ride it out, because history has shown that whether it was the 2008 collapse of the markets or any other recent financial or geopolitical downturn, those assets rebound faster than the rest of the market. What we sometimes counsel clients is to really look in the mirror and see if you can weather a year, 2 or 3 of tougher times and declining revenue, or flat revenue even with accelerating costs. And if you can't, then you should just take what the market will give you, because these prices are still, for anyone who's owned a team for 5 or 10 years or longer, you're way in the money, so better to take what the market will give you at the moment. But you have to be realistic about where you are.
We have a saying at Raine that, as relates to teams, that teams sell. It's just a matter of when. So if you can ride it out, I mean, if you think about the horrible 2020 to 22 period of COVID, these teams had multiple revenue lines evaporate overnight, and they weathered the storm. So I think to Steve's earlier point about the resilience of these businesses, you've got multi-generational fan bases, very, very sticky customers. I'm a Jets fan.
You must be loyal.
I'm a very sticky customer, let me put it that way. Despite people telling me to switch my allegiances, it's not going to happen. So these businesses it's hard to replicate that dynamic in other more traditional industries.
How about this notion of player strikes, right? Years ago, we had it in sports. Today, we see it in Hollywood, right? In the Hollywood ecosystem, see it with the United Auto Workers. Things have been quiet in the sports community. Anything to share around, player relations in various leagues that you intersect with?
Well, the biggest macro change within all North American sports, save baseball, over the last 20 years, I think, has been the labor deals that have been cut, where essentially in hockey, basketball, and the NFL, the players are partners with the owners in terms of sharing revenue. And that has, I think, led to an era of labor peace generally, and will continue to. Baseball is the lone sport among the 4 that does not have a salary cap. Frankly, it's one of the things that I think about or worry about with respect to international soccer, where you don't have those same safeguards. But that structure in the 3 sports that have a salary cap, I think, has really stabilized the industry, and the results are there. The profits are up, revenues are up, and the players, for the most part, have been on the field or on the court.
Get those interests aligned.
Or the ice.
Yeah, or the ice. Let's talk a little bit about players, including former athletes, as investors. How has that changed the dynamic as we started to see noteworthy athletes be part of ownership groups, or does that tend to help a bid, or can it hurt a bid when you envision that or you see that as part of an ownership group or proposed ownership group?
The answer to your question is yes. It can help and hurt. I've seen both. I think it depends on the motivation for it. If it's to generate buzz and excitement, I think people tend to take those situations, at least we do, a little less seriously. If it's a complementary part of an overall transaction, then that's fantastic. But it has to really feel organic, in my opinion, for it to work. To your point about athletes as investors, I think it's just this evolution of, sort of the creator economy, where people want to participate in the equity value of these businesses and not just, be paid fixed salaries, albeit very high salaries. But that's how you generate generational wealth, is by participating in the equity value. So it's really no different than really anything. They want access to those opportunities.
Pivoting to the investment in not only teams but also stadiums and the revenue potential therein. One of the things we talked about as we got ready for this call was that some leagues and teams and team owners historically in different places around the world haven't taken as much advantage of the revenue opportunity of the stadium and the rights and the seat licenses, et cetera. What leagues have been on the forefront of that? Obviously the NFL, et cetera, here in the States, but what leagues either around the world or in different emerging leagues have not, where you still see opportunity, where investors are making that part of their investment thesis?
I'll let Colin take that one.
I would say internationally, football is a significant area of focus where a lot of these stadiums have tremendous history and heritage and like deep ties to the fan base. But I'm not going to call out specific facilities, but if you go tour them, having spent time in some of the big NFL stadiums here, it's shocking how much more investment they can handle and take. So I think that's a big part of people's investment thesis. I know in Chelsea it was a huge part of updating Stamford Bridge and creating more hospitality, more moments to engage with the fan, especially outside of the match or the game. I think what Liberty has done around Atlanta is spectacular, and you're going to see a lot. My guess is a lot more owners try to replicate that model to program the stadium or around the stadium 365 days a year.
Yeah, I mean, it's interesting. Our bank happens to be the official bank of the Las Vegas Knights, and we helped them build a practice facility with our name on it. And last night, the defending Stanley Cup champions opened their season with a victory. And it is amazing just to watch. I was watching on TV the theater that they've created around the opening moments of a game. But it's an example, I think, of ownership creating revenue streams and driving brand loyalty and turning it into an experiential event, not just a sporting event. Do you have other examples of where you've seen that level of creativity, where a new ownership group comes in and sort of creates additional revenue streams and almost turns some of the experience up to a different level?
Ownership can get tired, and over many decades, in some cases, of owning a team, I've seen management fall into not a rut, but just a way of doing things, and they don't think about things differently. The two that come to mind, to me, both are in Milwaukee. Herb Kohl, Senator Kohl, was responsible for bringing the Bucks to Milwaukee, owned the team for 25 or 30 years, was the United States Senator from Wisconsin, had deep roots in the community, but was in Washington a lot and had the same staff for a long period of time and did what he could. When Wes Edens and Mark Lasry came in and bought that team, they immediately reinvigorated it. Now, they had Giannis, fine.
That helps.
But Giannis was there already. They got a new arena built. They've developed around there. And that obviously has become one of the hot franchises in the league. And the same thing with the Brewers. Bud Selig owned the team for decades. Again, brought the team from Seattle, gets huge credit for that. But there was a certain way of doing things. And when Mark Attanasio came in, he took the attendance from 1.5 million to 2.5, 2.6 almost overnight, and has sustained that, and obviously put great teams on the field at the same time in a relatively small market. So there are examples of that. Management really matters in all businesses and in sports as well, and the quality of management and new ways of thinking about things make a difference.
Yeah, that's a great observation. Thanks, Steve. Colin, from your perspective, how important is that, or what experiences can you share around ownership and the
Sure.
level of engagement, invigoration, and new revenue streams?
I can speak to a couple specific experiences. We're working with longtime clients at City Football Group, the parent company that owns Manchester City. They are working on an entire entertainment district development right now in Manchester. You think about a relatively big market, but underserved in terms of an arena-type experience. So really thinking about, as I said earlier, how do you keep those fans, or potentially not fans, but that want to have entertainment around your buildings. Another project that I spent a lot of time on with our friends in Miami who got the Inter Miami franchise. They've announced what they're going to build just south of the airport there. Of course, Messi arriving certainly helps. But I can tell you, as they thought about the investment opportunity, getting a specific soccer stadium in Miami surrounded by a bunch of mixed-use real estate was a big part of the thesis. And they have construction background, the owners, the Moss family. So pretty optimistic that that'll be a really incredible experience for fans and for non-fans that just want to spend time around everything they have to offer there.
Yeah, and since you mentioned Messi and the phenomenon that's going on in Miami, it's incredible to watch. And as a struggling Jets fan, you know, the Aaron Rodgers excitement, and then the highs and the lows. As
4 plays, 3 plays. We got 3 plays.
Do you think the star power of those individuals is still just one of the most enduring thing about you know, how to drive revenues to a franchise?
Without a doubt. I mean, he's a unicorn. There's probably no one else in the world that would have the impact he's had. But I can just tell from what I've seen in terms of their forecasts pre and post Messi, it's a significant step up in terms of revenue.
Steve, any observations about star power?
Well, I think Apple's really happy that they signed the deal before Messi came on board. They look pretty smart to have that long-term deal locked in. I think it might have been a different negotiation now than it was a year ago. You know, star power, you know, Messi is a unicorn, and he stepped in and delivered, you know, immediately. I will say this, that there's not always a correlation between how much you pay someone and how they perform on the field, especially in some of the team sports. And, you know, that's the art of picking players. I won't mention any names, but you know, there's certainly some superstars around Major League Baseball who, like Mookie, I will mention the positive, Mookie Betts delivered when he went to LA, but there are others who signed huge contracts and are locked in for 10 years or more and are ordinary, and that's a problem. So you win some, you lose some.
Right, right. In terms of themes that you think the press is not covering, are there one or two things you would call out that in the business of sports that you would share with this crowd, with, you know, obviously investors, owners, people in the sports ecosystem that are sitting in this room, that you think the media should actually provide more coverage of?
Well, my only comment there is in our business, Colin's and mine, the people who will tell Scott things off the record are often people who have an agenda and aren't telling things as they are. So my advice to the readers is not to believe half of what you read, because the people who are talking, people who know aren't talking, and the people who are talking don't know.
I couldn't second that.
Well said.
I second that, having experienced a lot of what Steve's, I think, alluding to in the last 18 months between various football projects, where the UK press is a completely different animal. I would actually, it's more than 50%. Don't believe more than 50% of what you read. And Steve is 100% right. These are sophisticated bidders in a lot of these situations. They have full-on PR teams that are trying to push a message for whatever reason they want. And you've got some gullible journalists, not Sportico, of course, that will fall for it. And this stuff runs, right, and takes on a life of its own. So I actually would prefer the press to do less, not more. But
right.
I realize it's an important part of the total ecosystem.
So I'm going to close on ask you each this question. You know, in investing, there's the steak and the sizzle, right? So with a number of emerging sports leagues, you mentioned lacrosse, I think, earlier, and in emerging sports leagues, we see a lot of investors and investment firms focused on what the next thing could be of interest around the sports ecosystem. Give us examples of things that you've come across lately that seem interesting, that can provide that sizzle that may be years out in terms of getting more eyeballs and excitement and momentum. And you mentioned, Steve, how long it took for the WNBA to really become what it's turning into in terms of of audience and excitement and the thrill of it. But what sort of emerging leagues or activities do you see investors allocating capital towards that give you that sort of sizzle and excitement that can come years forward?
Well, I've been watching the Republican debate, so I'm going to answer a different question. Rather than talk about leagues, I would say some of the most exciting opportunities in the sports area are in technology right now, and technologies that enable viewing of sports in a different way. The NBA at their All-Star event last year previewed a company called Cosm. That it's not the Sphere, but it's a smaller version of a couple of thousand people in a space watching sports as if they're in the front row in a truly immersive way. So what technology is going to be able to do in the coming years to enable sports to continue to drive eyeballs and revenues, I think is really where some of the exciting opportunities are.
Thank you, Steve. That was an appropriate derail of my question. I love it. Colin, something on technology and/or emerging happenings?
We're spending a lot more time, or it's long overdue, with women's sports. We're working on a project with the NWSL right now. It feels like it is here and is sustainable. We're seeing a lot of investor interest in women's sports generally. I think from our fund perspective, we're not set up like a lot of the people you hear from today, where our LPs expect us or want us to invest in teams. So we're not looking at teams. We're looking at a lot of the things that Steve is alluding to, the businesses that surround the sport and the IP and monetize it. We have a big gaming practice. We were early investors in DraftKings. So those types of businesses is what we're looking for out of our fund, at least.
Well, this has been a great conversation. I appreciate it. We are not going to take questions from the audience at this point, but I think touching on the changing dynamics and the continued growth in the sports ecosystem from a team's perspective, a technology perspective, the ecosystem that surrounds the sporting community. And James Carville said a long time ago in politics, it's the economy stupid, and in the sports world, it's the media rights stupid, and it's the eyeballs and the interest. And live sports as part of our entertainment ecosystem is still the most thrilling thing that we all have, including Colin with the occasional Jets win. So thank you for your comments. I really appreciate it. And I think this has been a really informative panel. So thank you, Steve. Thank you, Colin. Appreciate it.
Thank you. Thank you.